To begin with our big issue, the White House opening a new front in the trade war.
New tariffs on Mexico.
The Mexico escalation.
This has got nothing to do with trade.
It shows that tariffs are being weaponized.
The generalized sort of weapon.
What's the incentive now to negotiate a deal in good faith?
The biggest issue here is the uncertainty.
Uncertainty will be quite a dominant feature.
The negotiation at gunpoint makes us very, very nervous.
A trade issue that's not going away and doesn't seem any closer to resolution. In fact, today it kind of took another step back.
The read-through to U.S.-China, which we are taking from that, is that there is probably going to be no short-term resolution.
We might be worried now that while ever Mr. Trump is in the White House, trade will be an issue.
Joining us around the table to discuss, Dan Suzuki of Richard Bernstein Advisors, Steve Chiavarone of Federated, and Thierry Wizman of Macquarie. Guys, this was a surprise to most people. Terry, not so much to you. Walk me through why this move made sense to you.
We thought that coming into the 2020 election in the U.S., Trump would, reignite the rhetoric from 2016. It seems that in 2016, the rhetoric against Mexico and the idea of pulling out of NAFTA worked, potentially in his mind, and so there'd be no reason to not do that again. I think one motivation here, however, and maybe why it's coming a little ahead of the campaign season, is because we know that Trump wants to get the USMCA pact through Congress, and by threatening these tariffs on Mexico, it actually elevates his bargaining position. Maybe these tariffs are not so much directed at Mexico as they are to the U.S. Congress. In effect, telling the U.S. Congress, if you do not pass USMCA, this is what lies ahead, i.e. 25% tariffs against all Mexican products coming into the U.S.
So not a big surprise to you, but it was a surprise to a lot of people. Futures negative by more than 1 full percentage point. Dan Suzuki, what do you tell clients this morning?
I think I tell the clients the same thing I was telling them yesterday and the week before and the month before that, is that the underlying fundamentals are slowing and the tariff noise is actually increasing the uncertainty. And I think that reinforces the negative impact on the economy. I mean, try to think about, put yourself in the shoes of a corporate, executive trying to plan your investments now. You've just started to move your manufacturing and your sourcing from China. Maybe you moved it to Mexico, and now, look what lies ahead. I mean, right now, if you look at most of the uncertainty indexes, they were already at kind of historic highs, and now this just adds another layer to that. So I think, from a corporate perspective, you have slowing growth, you have rising wages, you have a rising uncertainty. It's a tough time to be a planner.
Steve?
Yeah, I mean, I think this is a real problem, what happened over the course of the last day. And you know very well that we've been sympathetic at least to the logic behind some of the trade rhetoric and disputes with China.
You've not been alone.
No, but the issue here is that you're using an economic tool for a non-economic goal. And that, if tariffs are on the table for every political dispute, how do we predict that? And in addition, I think this makes a China deal harder because let's remember, the Mexicans agreed to a deal. I mean, USMCA was agreed to, and now we're coming back. So I think it enters a level of uncertainty for corporations on where to invest, for investors, because now we don't know what the range of issues are that will prompt a tariff response. And I think that it causes you to take a step back, uncertainty's higher, and downside's potentially lower.